Today, cryptocurrency prices recovered despite Russia's incursion into Ukraine. Galaxy Digital's Mike Novogratz lays out the other big risk to Bitcoin: inflation. And BitGo's Mike Belshe explains how institutional investors can protect their crypto assets. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Crypto markets recovered following yesterday's sell-off, gaining an average of 2% by noon Eastern. Investors seem to be looking past Russia-Ukraine concerns, at least for now. Bitcoin gained a little more than 2% and crossed back above $38,000. Ether rose almost 4% and sat just below $2,700. Terra's Luna token, well, it was among the biggest winners today. It rose more than 12% and was worth about $60. For more context on this rebound and whether it'll last, here's our own Tanea McKeel.
Don't get caught up in this little rebound today. That's sort of what I'm hearing from analysts all day. Intraday, we love to see it, but we're still downtrending off the record. So until we break above that February high, which comes in at around $46,000, we're kind of looking to retest the recent yearly low, which is around $28,800. Of course, and we talk about this all the time because that's just how it is lately. Of course, Bitcoin and Ether are kind of moving in tandem with the broader markets. Earlier today, the S&P 500 also saw a little bit of a bounce that wavers, but that came after closing in correction territory yesterday. Investors continuing to juggle, brewing tensions between Russia and Ukraine, as well as concerns about record inflation and the Federal Reserve's monetary policy pivot. And that could mean rate hikes starting as soon as next month. Someone also mentioned to me earlier today, markets need to kind of move past President Biden's expected crypto executive order before we see any, forthcoming bull run. Some investors are a little bit anxious about it, but, the thing to remember is whatever comes of it, regulatory certainty always drives additional institutional adoption. So, not too much to worry about in terms of that. How long does this last? Zooming out a little bit, it's sort of hard to tell if we're in crypto winter. If we are, that's an extended bearish period in crypto. It's only happened once before in this space. So if we are, that could go on for several more months, but this could also be the setup for another bull run in the second half of the year. And investors seem pretty split, completely split on that one.
All right, those are the price moves. Now let's get to the headlines. First up, Russia and Ukraine have dominated the news lately. But Mike Novogratz of Galaxy Digital took to CNBC's airwaves to warn about the other risk to Bitcoin this year: inflation.
We have an inflation problem. The Fed is behind the curve. They are going to have to hike aggressively this year. When you look back historically, when we have inflation this high, the only way you stop it is to put the economy in a recession. And so Bitcoin will be really interesting. Will Powell have the gumption to be a recession provider, an inflation killer?
Novogratz also shared his outlook for both stocks and crypto this year, and his answer for both is the same.
We're in for a year of tough trading in both stocks and in crypto, right? It's going to be defined by big short covering bear rallies, right? Bear market rallies are brutal. But in general, asset prices were overvalued in the last 18 months. If you look at the chart of the S&P post-COVID, it went parabolic for, straight line. That has to correct at one point.
India just released new ad guidelines for crypto in its continued push to regulate the industry. The new restrictions prohibit calling digital assets currencies or securities, and they also require advertisers to lay out a clear cost for consumers. These new rules go into effect in April, and they come after the Indian government also released new tax guidelines for crypto earlier this month. Finally, the company that runs the New York Stock Exchange could be getting into tokenized stocks. Intercontinental Exchange took a minority stake in T0 for an undisclosed amount. Now, T0 lets businesses list digital tokens that represent shares in a given company, and it all operates on a blockchain network. Now, the company is only in the early stages. Its most notable offering is a tokenized stock for Overstock.com, which is also an early investor. Okay, for our main story of the day, CNBC's Kate Rooney sat down with Mike Belshe of BitGo to discuss how the company protects digital assets from high-profile hacks and what the recent round of crypto volatility means for clients.
Joining us now, Mike Belshe, CEO and co-founder of BitGo. Mike, great to see you. Thanks so much for joining us.
Thank you, Kate. Good to see you too.
And talk about custody and sort of explain how that works. You know, if you're holding cryptocurrency for a hedge fund or an institutional investor, are you guys taking that offline? Walk us through the process of protecting one of these assets that otherwise could be pretty vulnerable to hacks.
Look, this has been one of the big worries about digital assets, and BitGo's mission statement is to deliver trust in digital assets, and that means helping people overcome whatever fears or insecurities they have. And obviously, hacking has been something that's been top of mind for people. So, from our beginnings, that's what we were working on. It's like, what's a security model that can be used to keep these assets safe? So we're big believers in cold storage. Cold storage refers to taking assets offline, off the internet. There's a lot of people out there that can hack 24/7, and we think that one of the best ways to secure it is to make sure that your assets are simply not online. And so we use a combination of physical vaulting as well as software vaulting.
I guess, you guys work with a lot of the institutional investors that have gotten into the space, and that's been part of the bull case, is some of the biggest investors in the world and some of the most closely followed hedge funds really moving into the space. Can you give us any sense of what you're seeing from the institutional side and the interest from some of the macro investors that you might not typically expect to be investing in cryptocurrencies?
Yeah, as the ecosystems evolved and gotten stronger, we finally gotten to a place where the institutions can start to participate. And there's been definite periods in time. 2014 was a period where people started to look at Bitcoin and get interested. But the maturity of the companies and the institutions was not nearly ready. In 2017, we had another big peak and piqued a lot of people's interest again. But again, when you kind of looked under the hood, the maturity and process of custodians, the market structure wasn't really quite ready. And then now, after all of this building that's been going on, institutions are finding, yes, this is an asset class I can participate with. I've got trusted vendors. I know what they do. I can see their audits. They pass my due diligence processes. And that's allowing them to participate. So who's coming into the space? Well, you see a few different camps. You've got some that are trading. They are trying to build businesses around that. They use a combination of cold storage that they keep for large amounts of asset, and then they trade a lot of real time, always active assets that they trade around exchanges across the globe. You see other folks that are interested in long term holding. They're interested in adding this to their portfolio.
That bull case, and it does seem to be coming from a lot of the high net worth individuals looking for a hedge against what's going on in the macro environment. Why isn't Bitcoin behaving that way, at least in the short term? We've seen this week with what's going on in Russia with Ukraine. Why has Bitcoin not emerged as that global safe haven that people have described it as?
Well, look, every day the premise of Bitcoin is getting stronger. We certainly saw that with Canada this last week. We'll come back to that in a moment. To answer your question, though, Bitcoin and digital assets are still relatively small. Also, with Bitcoin, the use case is fairly well known. With other assets, it's still emerging, so they're much smaller. You see a lot of speculative work going on with the number of assets that are out there. But because these are small markets, they end up being, I think, fairly highly correlated to other markets. So when you see a downturn in the equities market, and there's a need for cash, one of the first reactions of many institutions is to, flight to safety, get the liquidity now while you can. And a volatile market like crypto markets is a place where they're going to take from.
You mentioned Canada. I'd love to ask you about what's going on there. We've seen truckers protesting COVID-19 restrictions. In Ottawa, it's resulted in demonstrators having their bank accounts frozen and, in some cases, crypto wallets frozen. Is that something you think could ever happen in the U.S., and does that worry you?
Well, I think most Americans have felt pretty safe with the banking system, the financial system in general. We have not, here in America, witnessed firsthand some of the things that can happen when economies start to get a little wobbly. And we all can recognize that the U.S. economy is in a state we haven't seen for 50 plus years. So in Canada, what's happened this last week is, Prime Minister Trudeau decided to implement emergency powers and to freeze the assets of people that have not been convicted of any crime. Not only that, anyone that donated to these people is also being targeted. And this is an unusual thing. This is a use of the financial system to go after people that you disagree with.
And as somebody who holds digital assets on behalf of other people, is that something that worries you, that you may be the middleman there, and that somebody eventually, if it's a regulator and say something similar were to play out in the US, would you be required to hand over the keys to somebody else's Bitcoin?
Well, I'll tell you, we are working on this problem right now here at BitGo. So we've pioneered this multi-signature technology, and we believe it's very possible in a regulated, safe, compliant way to distribute keys across multiple jurisdictions. So imagine a world where, it's not just one country that is regulating your asset. It's actually multiple. And it would not be up to a single leader to be able to freeze it. You'd actually have to get multiple leaders together to agree that they wanted to issue an order to BitGo to freeze it. There's a lot of questions that remain around this, legal ones, regulatory ones, but this is very possible. And at the end of the day, it's just, again, extending fundamental principles of security and eliminating a single point of failure. So Trudeau demonstrated that he has the ability to unilaterally take your asset. Here in the United States, I think we do worry, as the right and the left become more polarized, that we could see a populist movement that might try to do something against their opponents in order to grow their own power. So I think we can build a banking system that protects against this. I think BitGo might be the only company on the planet with the multi-sig technology, with vaults that we already have in multiple countries, to be able to piece it all together. So stay tuned.
Before we go, Mike Novogratz also told CNBC how he's managing his crypto portfolio after the recent sell-off. Here's what he said.
We are rangy in crypto. I think that the only good side that crypto has right now is there's an adoption cycle. People that want to buy it, that want to buy into Web3, that see what's happening in the NFT space, and even want to buy into Bitcoin, because a lot of people don't think Powell will be able to pull this off. And so they think this is temporary. So we kind of see a 30,000, 50,000 range in Bitcoin, and you should lighten up at the top of the range and increase at the bottom of the range. In stocks, I'm selling rallies.
That's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.